So I believe that this session is going to be a very fruitful one for you guys, and especially you guys can actually get some, market outlooks or even some of the recommendations or insights of the market, right? So, definitely right now we will be starting our session. So if you guys have any questions along the way, right, when we are discussing about certain topics and you guys have any specific questions that it's burning inside your mind, definitely you can just drop it in the Q&A session and we will be addressing them along the way. All right. So right now, I guess definitely the elephant of the room right now, the political tension between the US and the Iran, right? Okay. So what it all happens when the President Donald Trump actually launched some strikes on Iran on 28th of February. And then right after that, we definitely see some news saying that Iran has also retaliated with some of the missiles sending over to the military camp at the other countries such as Bahrain, UAE, and also, basically those are the countries that are getting the retaliation strike, right? So at this point of time, what we are looking at is that the president has recently just announced that he is expecting a swift conclusion on the war itself, right? So I would say perhaps maybe Paul, since you are the experienced portfolio manager, right? What do you see if on this current situation, how is it going to affect some of the countries, for US itself and also towards some of the other countries within the striking range around somewhere around Iran. Yeah, what do you say about this?
Right. So, because we have our portfolios, so we need to think about like, whether the current situation or whatever developments in the world is going to change our views on our portfolio position. So, at this moment, actually, even like any wars in the past, recent past, it didn't affect our portfolio's positioning or the investment that we invest in because each of our investments has nothing much to do with whether a war will break out or not break out, right? So we are very much focused on the fundamentals and the structural changes that would benefit maybe certain countries or certain sectors, right? So let's say for semicons, right, we were very positive for more than 2 years already, right? It was very volatile for sure. There's a lot of negative news, positive news on a daily basis, right? And a lot of people are getting more involved now. Even like my, like my parents or my auntie, my uncle, right, also talking about AI, right? So more and more people get more involved, and more people have more opinions, right? When you have more opinions, then the conversation get very complex, right? So to us is that we actually identify these kind of ideas. Then over the past more than 2 years, there have a lot of kind of negative developments that has nothing related to AI, semicons, whatsoever, right? Especially the recent kind of war that actually the recent war has, the tension has been there for, Middle East tension has been there for a long time, right? So it's just like at which point is developed to what extent, right?
Yep.
So our focus portfolio perspective is very much to do with like I mentioned, right? Fundamentals, what that means, right? So earnings, right? Like semicons, whether the earnings will come in, right? So that's one part. And then the other part is let's say like for Japan also is a huge position of us in our portfolio, right? So for a long time already, right? More than 2 years, right? So that is more to do with Japan itself, right? Because internally Japan is going through like kind of economic reforms and a lot of like positive developments in Japan, right? Even the whole value chain in the semicon space. So Japan has a lot of like kind of high tech involvement in the supply chain, right? So there kind of there's a segment in Japan that benefited a lot, right?
I see.
So so if today if I'm going to invest based on whether there's war or no war, then I think it's a bit too childish to be playing with our money just based on that itself, right?
I
Yeah.
see. Understood. So I guess from Paul itself, from Paul, I can understand is that right now it's not really I know it's not to a point where it's very, very concerning and investors should be very panicked with the situation right now. And also, I guess right now there's a lot of markets that actually presenting a very good opportunities.
I think I also don't want to downplay like any because if any conflicts or any war, I mean there are people dying now, right? So I think what I'm to say is that like the world have experienced like World War One, World War Two, and many wars in the past, but we have managed to, as a human species, we managed to survive and actually go through like the developments, innovations, everything that brought us now here, right? So what is going to my thinking is that what is going to stop this? Is it like a war that could stop it? I think it's no, right? So not just like the Middle East crisis conflict, but it could be any conflict in the world, right? Yeah.
Understood. So it's definitely not what we can understand is that it's not going to the whole situation is not gonna end with a war, but instead it's kind of like an escalation that it's a progress that they have. It's part of the progress, right? Right. So maybe I can direct another questions to Jun Yong, right? So from our research perspective, do you see that this is actually is it something that our investors should be very panicked about from the research perspective and also from our in-house view?
I think right now, what the panic is, we don't know when the war will last. But from our view, we do think that the war wouldn't last for too long. For a few reasons. Very first thing is, I think look at both sides, both parties. If you look at US, if you look at be it Iran or US, I think there are no incentives for these few countries to continue fighting against each other. So for US, if you look at their current situations, be it economy, I think if the war continues to persist, definitely the economy will suffer for quite a fair bit because of the inflation, due to the high energy prices. While politically, I think Donald Trump, the President Donald Trump, is going to have their mid-election this year. So I think for US, definitely there are no incentives for them to continue further escalate the tension further. Meanwhile, for Iran, where they are in the Middle East, their major exports are actually oil, right? So if the war continue to go further, I think it will definitely disrupt their upcoming export through the Strait of Hormuz. While at the same time, it makes no sense for each other to, and also incentive for each other to compete further. And secondly, if we look at the oil prices, which is also the things that everyone is concerning about, ultimately for commodities, it all comes back to supply and demand, right? So for supply side, I think right now the global oil reserve is still quite sufficient, and at the same time, we don't see any slowdown in terms of the OPEC kind of like the production pace. While at the same time, if you look at the demand side, I think China growth is definitely slow. We do not see a huge spike in terms of demand, especially we are seeing a shift in towards or adoptions toward renewable energy. So from research point of view, we do not think the so-called right now the Middle East conflict, the war, will last for too long. So yeah.
Right. But let me just add on, like over the past like couple of days or a week, past 2 weeks, I received a lot of like calls and messages, even like clients like calling, right? But I think the key thing here is that let's say for example, like Asia markets opens, then suddenly like the oil price spike, and then when US market open, the oil price actually start like dropping, right?
Yep.
So it's very volatile, right? And then every single day in the morning, people telling me that the market is going to crash, right? And then every single day at night when US market open, it actually dipped like probably like 1% or 2% the maximum, right? Then after that, it's like some days it actually turn out to be positive, right? So if you just open the share price chart of S&P 500 or Nasdaq composite, right? Whatever US indexes, right? You can see that actually how come there's no crash, right? So I think this period actually reinforce to us is that we need to think more long term, right?
Yep.
Not to be too driven by all this negative news. So I think us as a human, I'm becoming more robot now because of for a long time in the industry, right? So you need to be a robot, a machine to withstand all these noises, right? So so for investors also, you need to like, start to like kind of know what is noise, what is the thing that you're investing in, right? Yeah.
Understood, understood. So basically, from our house view, we do see that definitely the war is actually, causing some chaos in the market, but it's not the end of the world, right? Basically, and also like what Jun Young has mentioned, the war is actually there's no incentive for both sides of the both countries, right? So definitely, what we are looking at is probably something that it might actually slow down a little bit moving forward, and perhaps they might actually strike a deal in between.
Yeah, actually very
Yeah.
important to actually focus on the incentive. There's no incentive to drag the war. It's very important to stick our kind of mindset towards that, because on a daily basis, right, you have a lot of news that come out saying this, saying that. So it will actually confuse a person's brain, right? But if you think it objectively, you just fixate your thinking that there's no incentive for anyone in either side. Right.
True.
So, but then news will be news, right? News are try to like get you and exaggerate, or I mean, some news also wouldn't know what's the truth, right? Like I think there's one example. I'm going to provide one example here is that um there's a kind of a news, and there's a radar, right, trying to detect like the the vessels like going through the strait, right? Is that they found that they can't detect the number of vessels that going through that carrying like oils, right, uh towards it is getting lesser, right?
Mm.
But then there's the news that's being reported, right? But the problem is that they actually turn off their transponder, so then you cannot detect, your radar cannot detect it. Then people think that, I think the media reported that, oh, actually there's a huge reduction in vessels going through the strait.
I see.
So then actually this news actually just like came out, the more latest news saying that, oh, actually they turned off the transponder.
I
Right.
see.
Then
Understood.
then suddenly then you see like oil price start declining to reacting to that news.
True, true. Funny thing is that, recently the oil price has actually dropped a little bit.
Yeah.
Right. I guess part of it is actually coming from the news, and also, some of the positive comments from the Trump itself, right? But I guess the moral of the story here is that sometimes news can be scary, scary for our investors to even influence them in making the right decisions.
Yeah.
So I guess sometimes we should just take a pinch of salt with all the news sources, and also just to verify and double check whether the news sources are actually giving out the right information. Right. Okay. So interestingly, just now Junior actually mentioned about the US market here, right? Before that, I guess since we also mentioned about the oil situation, where it has actually a lot of investors are expecting that since the oil is getting disrupted at this point of time, so there could be a chance where the inflation might hike, right? Yeah, because I guess oil is one of the most important commodity that supports the whole transportation industry at this point of time. So do you think that since we are seeing that this the war is not going to last long, is it going to affect the inflation rate, basically the global inflation rate, and also perhaps maybe it might actually affect the revenue from these companies, from all the companies that involve in the transportation or maybe like exportations?
I think right now, if we look at the oil itself, the oil price has shoot up, right?
Yeah.
And the biggest concern that coming from inflation is actually the upcoming, be it inflation and also the upcoming monetary policy pace.
Right.
So where right now, where this is not our base case, but in the case where the inflations continue to shoot higher, because of this high energy, which will translate into such a high inflation environment, definitely it will bring more uncertainty towards the upcoming monetary policy path. But I think right now, as what we have mentioned, I don't think based on the current situations, even though while right now the oil price could be volatile. There are still some uncertainties, even though both sides. Even though what Donald Trump has said that he might want to stop the war as soon as possible, things like that. But we do think that the oil such crisis. Right now the war wouldn't last that long, so I think the impact towards the companies might be minimal unless it continue to last for longer. But at the same time, if you look at sectors, right, I think with the higher oil spikes, in a shorter term, we might see more speculative, more oil sensitive oil and gas company that might get benefit from it. But yeah, that's our view. So
Understood. Got it. So, again, just to align back with our in-house view, right, saying that we do not foresee any, it's not going to prolong, the war is not going to prolong at this point of time, at this condition right now. So I guess the effect of the inflation is effect of the oil prices is going to be quite minimal, manageable onto the inflation rate. Okay, so I guess since it's a time of volatility right now, so I guess when it comes to any of the retail investors or even perhaps some of the corporate investors, they tend to see gold as a safe haven, right? And especially when the market is volatile, gold can be somewhat like a safer bet for them, right? But one thing is that right now, I guess the gold prices has been spiking up quite significantly previously, and then right now it's kind of moderating a little bit. So do we see any specific movements that coming in from this current situation that actually influence the movement of gold prices?
I think again for gold, right? Through our articles or through a previous Ask Me Anything sessions, I think everyone is concerning about gold, especially since last year we see a huge rally of gold. Even this year we see quite a good return in terms of gold. But just to reiterate, I think our views toward gold is still, we think it is a portfolio diversifier, and we shouldn't see it as a way to like seek for a higher return or chase the momentum. Reason why I think it's very hard for us to gauge the value of gold. If you look at gold, it's not like equity. It's not like a bond where it will give you coupon. It's a non-productive asset where they don't generate any cash to you. And at the same time, back to the fundamental. Right now, if you look at those futures market, if you look at those options market, we see the trading volume has spiked significantly. More and more contracts has been created, but the actual underlying is still limited. Right? So I think when someone asks, and also I see someone talking about safe haven, right?
Yep.
The volatility of gold right now, coupled with the speculative move, I think one day it can down up to 10%. I think a month ago, and right now it can spike up also by quite a high digits kind of returns in just within a single day. So whether it is a safe haven or not, I do not think so. So I think for investor, we should still see gold as a diversifier where investor could, given that there are lesser correlation towards our traditional asset, for example, like equities, right? So I think investor can have a small allocation, I think 1 to 10% as a portfolio diversifier. I think that would be the best. And yeah, do not chase for the return for the goal. Yeah.
True. Do not chase for the hype, basically. So yeah, again, just to reiterate, right? Like the goal itself, definitely it's I guess it has the preservation element, but looking at the fact that the price movement can be quite volatile, right? Can be, the range can be very, very much it's going to be a very huge changes in terms of the price itself.
Maybe I also add some background to gold is that I think historically gold has been seen as a currency, right? So you look at central banks, every country would have a central bank, of course, right? And every central bank would have a balance sheet, which is like kind of like your bank account, right? So every central bank, their money need to park somewhere, right? So central bank of every country they're not going to park money into the banks in their own country, right? So I mean, there's that because they sometimes will be holding like their own currency, but they also need to hold other currency, right? So if you look at the balance sheet of all these countries' central banks, they have very sizable gold position, and US US has very large gold position, and I think over the past couple of years, you have Russia, India, and China, and a few other countries actually ramping up their gold purchases, right? So why is that? Because in the past many years, these Asian countries or emerging markets, central bankers, they actually been buying U.S. treasuries as in their holdings in their balance sheet, right? So now with all these wars and all these kind of concerns with U.S. Having too much of a power, right? So then you can see Russia, China, India, and a few other countries also bigger countries started ramping up their own goal position, right?
Right.
Rather than too much into U.S. treasuries, right?
Yep.
Holding U.S. kind of papers, right? So the central banks are really buying gold, right? For quite a few years, recent years. So yeah, so it's very hard to put a value on gold price, but one thing that you can actually do as a investors is that you actually try go to the money supply in the world, right? So then you can get a ratio on it, right? So so that's one part, because gold, like Jun Yong mentioned, there's no earnings,
Right.
right?
True.
When you hold gold, right, there's no earnings, so you cannot value because every company there's a earnings, so you put a multiple on it, how many times, then you get a target price, right? So there's no earnings. So how do you go about it, right?
Yep.
So actually I'm very afraid of like kind of questions on these direct questions on kind of gold, because like if I say that I'm positive on gold now, then I'm afraid investors will go all into gold. So
True.
Junior
True.
also mentioned a very good point is
Mm-hmm.
better to stay diversified, right? So, and actually Buffett also mentioned before that uh, it's better to put your money investing in companies that generate earnings, right? So earnings, and then understand the sustainability of the earnings, and then the growth, right? The long-term drivers of the companies, right?
Mm-hmm.
So then, so when there's demand for your products, means that you might earn better earnings in the future. Then you decide what kind of price you want to pay for the earnings, right?
Yes. Correct.
So that is actually basically what we are more focused on in iFast, right? Because we are all like looking into the supply demand of the individual, like the companies, the sectors, right?
Yep.
To know the attractiveness of which country is more attractive or which sector is more attractive, right? So then so that is actually much more predictable, right? Yeah. So because it's like everybody will need a phone, right? So it just depends on what phone you are buying, right? And
True.
which phone is much ahead, which phone maker is much ahead compared to others. Everybody needs a car now, right?
Yeah.
I mean, long time ago, nobody needs a car. Everybody was riding a horse, right? So
Yes. Yep. Correct.
so now it's like then now it's like what kind of cars like would be the future of the next generation, right? So then you need to take a kind of decision whether well, which brand, which model have better technology, and whether will be adopted,
Mm.
right?
Yes.
So then you can actually project the earnings, the demand for their products, right?
Yes. Correct.
So so we are more focused on companies, earnings, sectors, which country is more well positioned.
Understood. Yep. So I guess it's a very clear, sharing from the two professionals here about gold prices. So basically, from what Jun Yong and also Paul shared here is that gold, we still remain our cautious stance, meaning to say it's a good investment for to diversify your portfolio, but probably not too much because you might actually incur additional opportunity cost from it. Yeah, because gold itself, it doesn't generate any income. So that's why we would say just to have a little bit for diversification purpose, and then maybe you can deploy the rest into the market, right? So speaking about market, and also one of the main character in this this war situation. We are talking about the US market right now. So just to align back with our current US market view, right? Our in-house view is that US market has been performing very, very strong over the past few years. And coming into year 2026, that is where we have actually revised our rating for the US market. So previously it was at an attractive rating, but now it's actually going into the non-attractive territory right now. So yeah, so since also on top of that, we have this war happening right now, which kind of disrupt the whole economy at this point of time. Does this really actually change our stance in terms of looking at the US market? Maybe we can, maybe Jun Yong can address on this first.
Yeah, I think overall, our view towards US market this year is actually still the same, which is not so attractive as compared to previously. Previously, I think we are attractive. Now we got back to a neutral. So I think the reason being is that from economic, we do see that US economy has somewhat slowed down. From the recent labor market, I think it somewhat reinforced our view where labor market is seeing some cracks, where we see low hirings and low fire as well. While at the same time, if we look at the consumptions, right now the K-shaped economy within the US, the lower income household, their consumption power is getting lesser and lesser. So that's one in terms of the US economy side. Secondly, I think since last year, one of the more uncertainties like tariff, like right now, all these things happen is all because of the president Donald Trump. When I look at this year, what we have Venezuela president got caught by him, and right now we see the Iran, the Middle East war, right?
Yep.
So I think all his policy, I can use one word to conclude, is uncertainty. We do not know what's next, right?
Yep.
So that definitely impose more and more uncertainty toward, be it business or be it policy wise. So and also that would definitely delay part of the business, their investment or their hiring decisions. So I think that's serve as the second factors that we are considering. And last but not least, as what you have mentioned just now, a few years ago, I think over the past few years, US market has been doing, I would say, very well.
Yes.
But so it also let investor more cautious about valuations. Where right now I think we are still concerned on the certain valuation within the US market. So which is why we are more positive on we are advocate investor to look beyond the US right now. So to find other opportunities out there in the market.
Understood. So as per Junyoung mentioned, there's definitely plenty of opportunities out from the US market, right? Okay. So maybe I can direct another question to Paul, right? Because I think we did have a few conversation before, and I understand that you are actually back then you are actually very you like the US market itself. You do have a lot of basically one of the favorite markets for you is actually the US market. So based on what Junyoung has shared earlier about the current valuation, about the current situation in the US market, right? When it comes to managing the portfolio, is there any specific adjustment that you have made onto the portfolios?
Yeah, so like for US market, we actually have continuously reduced our position, like taking profit. So we were very positive for the past at least for past 2 to 3 years. So we have reduced exposure, but we still have quite decent exposure there. And so we have gradually moved more exposure to the Asia markets, right? And also especially like Asia now is that Hong Kong tech also been like having a pullback, right, over a couple of past few months. So we also added to that side of the. So global tech is very big, right? Like globally, it's like you have a lot of choices. So we have decided to actually take advantage of the pullback in Hong Kong tech to add on to it, right?
Mm-hmm.
So Asia generally as well, we have added gradually, right? So we are now overweight the Asia market, right? So and then US side is not to say that we are completely negative on US. It's just that as a portfolio there's only 100%, right? So if you want to move to Asia, you need to cut somewhere, right?
Right.
So then everything that we do is like we need to decide like the risk reward, right, of it. So so then at this juncture we think that the Asia market, the Hong Kong tech segments is actually much more attractive. So doesn't mean that we can't make money from our US market, right?
Yeah.
We still have exposure, and we pretty much we pretty much have exposure through fund managers that we actually feel very comfortable with their strategy. So it's very important that what fund you pick, what ETF you pick, right?
Right.
Because that will determine whether they are able to capture any opportunities, right?
Yeah.
That's there at this moment, right? Especially the market is so volatile now, right? You know, oil prices like that, and then it's like the US market is like intraday, it's like it can swing here and there, right?
Yes.
So then you want to make sure that you have fund managers that have decent strategies that able to navigate this kind of period, right?
Mhm.
So that's very important. Yeah. So
Okay, got it. So it's again coming back to when we are looking at the US market, definitely what we are emphasizing here is that we are downgrading it, become the rating that we are giving to the US market is actually neutral, right? But again, just wanted to let our investors know that even for neutral itself, it doesn't mean that we are recommending our clients to exit from this market, right? Is that correct?
yeah, actually, I'm not too sure. Like after so long, right, whether the audience understand my optimism of the market at this juncture, even with the war going on. So I'm actually very optimistic about our portfolio position, right? So I'm very confident, right? So if you're still thinking whether to invest or not, I think you should take action right now. Yeah.
I
I hope that can actually show my optimism, right?
Yeah, definitely. It is showing. It is showing, like, yeah. And also, it's coming from a very experienced portfolio manager. So, definitely you guys can actually check out on the managed portfolio itself, just to see what is the allocations that Paul has allocated for the US market also. Okay. Right. So I guess since we are also on we are discussing about the US market, one of the main topics that I guess we cannot really avoid it, maybe not avoid it, it's like definitely we should also tap into it a little bit, right? Which is the technology sectors, right? So just like the past few years where US market has delivered that very, very good performance, it is actually mainly being contributed by the technology sectors, right? Like what we are talking about, the Max 7, right? So since right now, there's a bit of the valuation bubble coming in, and even coming along with this war situation, right? Are we actually getting closer to the bubble situation, or is it just like another, just another imagination situation from the investors who are being very, very cautious, very skeptical with the market? Yeah, maybe Junyoung, you wanna address a
Yeah,
little bit on this?
I think when we talk about bubble, one of
Yep.
the closest bubble that we have seen previously was the dot-com bubble, right?
Yep.
So if you compare dot-com bubble to today's the so-called AI bubble, I think it's different story where right now we are seeing, although the capex, I mean right now the biggest concern for technology is actually there are two things for semiconductor. We are seeing some of the capex concern whereby companies, technology companies, is spending in a very bigger size.
Yep.
But I think right now, and investors are concerning about whether there's demand out there, whether it can generate the returns to the investor. But I think if you look at the capex, I think definitely we are seeing more and more demand coming in. If you look at a certain example, we look at the hyperscaler, their RPO, their remaining their backlog is still very strong, still can sustain their current capex. While at the same time, if you look at their cloud business, their cloud growth, I think they are still hitting a very solid double digits growth. At the same time, it somehow reflected that the computing demand for the AI computation, I think, is definitely still remain very, very intact. So I think be it bubble or not, I think right now we do not think there's a bubble there. Instead, I think if you look at the companies, I think the demand is definitely still very intact. So but we are not it's not saying that we are not aware of the current valuation within the US tech. Definitely the valuation is high. So which is why for tech, right? Actually we are more positive, shifting our focus more towards the manufacturers and also the key components of the chips, which is those memory chips player, which is more in the Asia sites. So, which is why if you look at our house view this year, it's called Back to Asia, back to our home and home ground advantage, right?
Yes.
So you can see overall we are still very positive on the overall tech sectors, um, but also we do think that the demand is still there. Definitely, I think valuation is something worth to concern, but we are not in the bubble phase. Yeah. So
Understood. So right now, I would say maybe the bubble situation, it's not at a very concerning point of time, right? As
I
for now.
would say there's a bubble in market pessimism.
Oh,
Just kidding.
oh, okay. Okay, understood.
I think from I joke aside, but I think the key thing for us is that I mean that's also quite real. Like over the past 2 3 years, uh there are a lot of investors telling me that there's bubble. There's always excuses that being brought up to stay away from investing, right?
Yeah,
There's always
correct.
concern, right? So to us is that yeah, it's actually there's definitely there's a concern, right? So how do we like manage our portfolios, right? Is the key thing is that we try to run the risk reward analysis, right?
Mhm.
So now obviously earlier on mentioned that we are shifting more of money into the like let's say for example like Hong Kong tech, right?
Yes.
So those are big tech giants, right? They are actually pretty profitable, right? They dominate their segments, right?
Yes.
So they have very good kind of operations that's going on, right? So uh so then they are not in the chip they are not too much into the chip segment, right? So that's actually what I'm trying to say is that in the whole tech kind of value chain, there's actually a lot of options for you to choose from. Where do you want to shift your money, right? So that's exactly what we are doing. And also I think in the global tech side, there's also like we also like increasingly shifting our position towards the very strong software
Yep.
franchisees, right? So one key thing is that I think the key concern here is that people think that using AI models can create any software that can create any single kind of software companies in the world, right? I think that is too kind of too simplistic kind of thinking, right?
I see.
So there's so the I think earlier on we were chatting like that there are a lot of big software companies, right? They are actually trading very attractive valuations. They're even reporting like growth, right?
Yep.
So to say that any person with AI models that can easily develop software to replace them, I think that is actually too far-fetched at this moment, right? So for you to run a big organized multinational companies, you need to build a very big team, right? You need to
Correct.
be able
Yes.
to like manage people. You need to be able to like maintain the operation. These are very big things, right? Not
Yep.
just AI models and just build the software just like that. You still need to market your products, right?
Yes.
So yeah, I probably in the futures, maybe 5 years, 10 years, maybe some new companies right now are able to grow to a stage where they can compete internationally. Probably I won't rule that out. But if we are here to decide that most of the big software companies have very strong moat,
Mm-hmm.
um, can be easily replaced, I think that is too much it's too much already. It's the
Understood.
kind of argument.
yeah, and
Understood.
also add a little bit more on that. I think if you look at the past 1 week, right, when the when the market is worried about the war and we
Mm.
see panic selling in those high beta, those tech companies, right? Actually, if you look at software company, if you look at the software sectors, actually
Mm.
we are seeing another story. We're seeing an uptrend, a reverse after the sell off over the past, I think, 1 year. So I think just to reiterate our view, I mean, regardless to the software company, I think we still think that the current sell off because of the entire AI disruptive. I think the fear is a bit too much. The sell off is a bit too much. So
Mm-hmm.
yeah, and as what Paul has mentioned, their mode currently right now, I think one of their mode and also their data throughout their database throughout the years where they have been built on. So yeah.
Yeah, actually, the mode is not just on your software itself, ability or the features of it. Is your mode is can be like your customer service, your support, right? And then your network, right?
Yep.
Then database as well. Okay. And then also the interface or usability, right? Friend, whether it's easy to use, right? Those kind of things. Yeah.
Understood. Yep. So I guess just to summarize a little bit, I guess right now we still see some good potential from the technology sectors, but right now our in-house view is that we are much more favor onto the software companies right now.
Yeah, because the valuation is very attractive. Because of AI disruptions, right? I think very good example that I can actually share now because I'm looking at this laptop and it's a Microsoft, right?
Yes.
Microsoft, we know that over the years, like there's the free versions of it trying to compete with Microsoft, right? Why are you
Right.
paying for Microsoft, right? But look at it now, it's like Microsoft is still like making very good money, right? You're
True.
still paying for it, but there's actually there are like at least like two other options, right?
Yes.
So
Right.
competition, what I'm trying to say is competition has always been there. It's just that are you able to have a product that actually can compete and take market share and become that you can beat the market leader, right?
Yes,
Yeah.
correct.
So basically, like the mode for Microsoft is that it's a kind of a licensing kind of product, right?
Mm-hmm.
So then you make every laptops that you it's like laptops that you buy is like you install your Microsoft and then you make sure that it's a kind of a business language that when you transfer file, when you actually use it, when you communicate, it's actually all standardized, right?
Yes, correct.
Yeah.
Yeah, it is indeed a very good example actually. It shows that how the business has its own continuity plan, right? Just to be besides from just just like any of their usual operation, they can also bring it up into any of our daily life, and it's basically revolving around it. So basically we have to use their software every day. Yeah, so I guess this is also the power of technology. And perhaps from this perspective, what we can also see is that there's going to be a very strong growth potential coming from some of the software companies in the market right now. Yeah. Okay. So speaking about, because just now both of them they have actually mentioned about the Asia Tech and also perhaps the Asia Pacific region, right? So yeah, and also we do have an article saying that coming back to our home ground benefit advantage, and also Asia is coming back right now, right? So I guess yeah, this is there any specific countries that we are focusing in the Asia Pacific right now? I understand it's going to be it's kind of like a very huge region, but perhaps you can just give us a few, maybe like 2 to 3, if that's okay.
Yeah, I think
Yeah.
a few region. I think one of the jargon that we use is back to our home ground advantage.
Yes.
So definitely we cannot escape China, cannot escape Singapore, we cannot escape Malaysia because I think FSM globally we have different um um office in over these places.
Yes.
So over in China, I think China is a very policy driven market. So
Yes.
for investor who have been investing in China, we all know that the government policy direction does matter. So right now, what investors are scared of is actually for investors, we wouldn't want to see like the regulatory crackdown that happened again, like
Yes.
back in 2021, 2020 and 2021, where those tech company like Alibaba got crackdown by the regulatory. So I think so for China, policy is definitely one of the things that we're looking at. But recently, over the past one year, last year we have changed our house view. We do think that China could be one of the dark horse because of we are seeing some of the changes in terms of government policy, government tones, where they are more friendly towards private sectors. And indeed, it actually turned out quite well where right now we are seeing a more increasing focus, emphasize on the private companies. We see some of the like private economy promotion law from the governments. They are increasing more and more. Government is paying more and more focus within the private companies. So we think that so we think that definitely is one of the very huge catalysts for the China market as a whole. So and apart from China, I think one of the market that we like also Malaysia, back home Malaysia. I think for investor, I think most of the audience here, most of the investors here are mainly Malaysian, right? I guess.
Correct.
So I think if you all can notice, I think last year Malaysia is one of the worst performance among the region, and that mainly because of all those political uncertainties, that the tariff, all those that have clouded much of the local corporate earnings visibility, because most of the Malaysia companies are actually exporters, right? But moving into 2026, actually we see it as a different story now. We are turning more positive on Malaysia market. A few key reasons. I think externally, those external risks like what we have mentioned just now, tariff. Right now, I mean, not long ago, US tariff has gotten rolled down by the US Supreme Court. And then even though the President Donald Trump has reimposed another 10% tariff by 150 days, I think for countries like Malaysia, where previously our tariff stood at like 19%.
Yes,
so I think this definitely brings some of the positive to, I see it more positive to the domestic economy, to the domestic equity markets. And to the conflict right now, major external risk, but I think the impact toward Malaysia is minimal, because if you look at Malaysia, we are the net energy exporters, right? So definitely the impact towards Malaysia is lesser, and our trade, as a trade-oriented economy, our trade to GDP ratio has over 150%. But if you look at our trade with the Middle East country, it's not even 5%, it's like 4%. So the impact of the entire conflict that is going on right now towards Malaysia is rather minimal as compared to other Asian countries. So that's the external front, right? All those external risks, potential risks that we are facing. But if you look at domestic economy, if you look at the recent GDP quarter, it has been topping the market estimate. They are doing better than what the analysts think, what the government, even the BNM central bank thinks. So it somehow reflects that right now the Malaysia economy is still pretty much anchored by our strong domestic consumption, as well as the some of the construction upcycle that pushing up the local equity market. So on the earnings side, I think ultimately equity market is still back to the earnings, right? Like what Paul has said just now. So on the earnings front, I think right now on the board, be it large cap, be it small cap, we see upwardly revise in the earnings, and it's not like just a minimal. We are looking at a double digits positive earnings outlook for the Malaysia companies. So and right now what we are seeing from the local equity market is that Malaysia has long been very reliant on foreign fund outflows. So last year, the foreign fund sell-off is the main reasons that caused the market downturn. So, but turning into this year, what we are seeing is there are more and more foreign fund flows coming in. So even though last week we see a very positive foreign fund inflows coming in, so coupled with what I have mentioned just now, I think Malaysia is also one of the market that we are very positive on.
Understood. Understood.
Yeah.
Maybe I
Alright.
just add on that.
Yeah.
I think
Yes.
the part that I like the most in this region is actually the peace that we are enjoying.
Yeah.
Oh, I see.
Yeah.
It is true. It is.
There are a lot of missile flying here, flying there, but I don't think. I think Malaysia or even Singapore is the
Uh,
safest place.
Yeah, I
for
think
us.
it's like this region is more like we are actually very business friendly. I mean,
Right,
like
true.
in another way is to is on that point. So to the extent that even like Singapore is a small country can become like a financial hub, like right, global financial hub.
Right. True.
So and a lot of interesting going on like Malaysia, ASEAN, right? So even Malaysia, we actually can see like a lot of progress, right?
Yes.
We are becoming like more internationally known, like from a business perspective, right? It's I mean in the past like there are a lot of like kind of not so nice news, but recently I think a lot of very good news, right? So very important and also it's like you have like two major superpower presidents in our country, right? Since when that happened before, right? Like
True.
Trump, President Trump and President Xi actually were in our country, right?
Yes. Correct.
So we also like have a lot of dealings, exchanges with a lot of leaders, right?
Mm-hmm.
So actually, it's very proud to be Malaysia, right? So
Wow. That's very good. That's very good.
yeah. So I think I'm more positive because like when you're equity guy, you tend to be more positive about the future, right?
True.
So I definitely tend to be more like positive, like looking at the
Mm-hmm.
bright side of things, right? I think yeah.
I see. So maybe I can yeah, maybe just for Paul, right? Since we have it's you are the portfolio manager, right? So when it comes to Malaysian market, besides from the piece that we are getting from, and also all the all the benefits that we are getting, all the our economy is recovering. Have you actually increased the weightage of Malaysia in the portfolio?
Yeah, so because we run a global investment portfolio, right? So for global investment portfolio to have a 10% allocation into Malaysia is actually quite big already, right? So
Understood.
we don't intend to really go too big, right?
Mm-hmm.
Because unfortunately Malaysia is still a very small kind of a country in
Yep.
the global market, right? So we also need to think about like whether because we are not running a Malaysia fund, right?
Right. Yeah.
Because we are IFAS, we are actually our focus is to invest globally
Mm-hmm.
and profitably for our clients, right?
Yep.
So there are a lot of local fund houses in Malaysia that very focused on Malaysia. So I think our clients can actually focus. There's a lot of I mean even our fund list, there are a
Yep.
lot of them for our clients to choose from already. So what we want to do here is that we want to get our clients to be exposed to the global opportunities,
Right.
right?
True.
So I think if anything, I think our Malaysia exposure is a bit too high for a global portfolio.
I see.
So
Understood. Understood.
yeah,
Right. Yeah. So mm,
but uh uh also like because we see opportunities,
yes.
right? We see opportunities to make money, right? So if at some point we think that the opportunity, the risk reward is not as attractive, then we definitely would reduce it. Yeah. But at this moment, we are happy with our 10%.
Understood,
Yeah.
sure. So I guess this also gives an idea to our viewers here, saying that, even when we are building up a diversified portfolio, a global diversified portfolio, so especially when it comes to those investments, be it unit trust funds or ETF that are investing into single countries, so the allocation is also quite important, just so that we can still allocate some into the market, get the momentum or the returns from it, but not overexposed to it, right? Right. So just to have a quick check, right? So the
Maybe I just take some questions there. It's
yeah,
like
sure.
there's a questions on is the US market attractive for long-term investors? Actually, personally, and even in our portfolio, the answer is yes, right? Because even though we underweight US, we still have quite decent exposure to it, and many the key reason is mainly because US market has a lot of very big important franchises companies, right? So they are not just focused in US, but they have technology and their products that is globally used by a lot of people. Like even like right now, it's like probably like a lot of things that on my body is made in US, right? I think like even our audience here as well, right? Maybe in front of you, there are a lot of products that is from US companies, right? We can't escape right from it. So so that is the so long-term perspective. So that's the design of our portfolio. We have kind of a long-term kind of views on a few big areas, right? Countries like US, Europe, Japan, China, right? Actually Malaysia as well. So
Sure.
so a few countries that we think highly of, right? So then yeah.
Yep. I guess definitely US market is something that we are looking for long-term investment. Like Paul mentioned, right? Definitely there are still some companies that are delivering impressive performance
Maybe
for the
just
investors.
directly like
Yeah.
answer like there's a questions on outlook on Japan and Europe market. We are very positive on both countries, Japan and Europe. Yeah.
Oh, that's a very straightforward answer.
Yeah.
Yeah.
But if you want like more details kind of answers, you can actually go through our website and it's like quite easy to search for
Mhm.
the reasons.
Yes, correct. Oh, by the way, just to shout a little bit, right? Since we do have this star rating feature in our website, so this star rating is actually being uh prepared by our research team, and we will be sharing a lot more about individual markets, countries, or even some of the sectors, and perhaps some of the regional outlook as well. So definitely, you guys should check it out on the star rating page. Yeah. Right. Let's see the outlook for local market thoughts. Yeah, I guess right now, just now, Junyoung and also Paul has already shared for our local Malaysian market, we are definitely having a positive outlook. And in fact, we are actually giving an attractive rating for Malaysian market right now. Yeah. So, yeah, I guess for now, is there any other?
I'll take the next questions on the war. If the question is if the war is going for another 2 months, will there be huge impact to MY and SG rates? So there are two questions there. Actually, the first question is if it's going to last 2 months. So when we deal with if kind of questions, right, it can be like if what if 1 month, what if 2 months, what if 3 months, what if 4 months, what if 1 year, right?
Yep.
So we are going to play a lot of scenario kind of analysis. So this is actually not that not that productive as an investor, right? So the questions that we always should be asking is that what are the more structural long-term kind of dynamic that's playing out, right? So focusing on whether this let's say like the talk is on REITs, right? Whether REITs there are a few drivers, right? Earnings wise is whether the companies are able to get individual companies, the REITs companies are able to get deals from attractive deals, right? Value accretion kind of deals for the company, for their own companies. So then Singapore side, I think lately is more towards like data centers, right? Data centers has been driving the growth in Singapore REITs. So data centers, the whole investments need to be lucrative and continue to be a key demand kind of area, right? So then the Singapore REITs probably would continue to be attractive, right? I mean, that's just one part. Singapore REITs got a lot of other segments. There's the hospitality side, then there's the industrial side, there's the office side, right? So then if you think about the fundamentals of Singapore REITs is that Singapore, you got to ask yourself like whether Singapore will remain a global financial hub, right? I think the answer is pretty much like everybody still think it is, right?
Yes.
So
correct.
there's no other there's nothing that point to for it to not to be, right? So if that's the case, then a lot more global money flows going to Singapore and demand for their land, right, and assets, and then Singapore REITs would have continued to remain to have good fundamentals. They're actually out of land, right? So that mean, yeah. So that's one part. I think so I would rather focus more on the kind of fundamentals, right? Yeah. So that's that. Yeah.
Okay. Oh, I see a very interesting question just now. There is a client actually, a viewer actually asking about, um, a Malaysian investor has 50,000 solely for investment. How would you recommend in terms of region and asset classes? Well, I guess, maybe I can address a little bit because I'm from an investment specialist team. So basically, I guess there would be a lot more information that we need to get from you, such as your risk profile and also how long is your investment horizon. Yeah, but definitely I would be happy if you can actually reach out to us. And yeah, I'm sure that we can actually prepare some personalized investment recommendations for you. And then maybe we can see how we can assist you on building your portfolio. Right.
Give him a call tomorrow morning.
You can definitely, no problem. Yep. Okay. I see that there is actually a question, which is I think is a very interesting one. So the question is, do you think that this year is more of a tactical profit taking, or would you still position as a long-term core holdings? Yeah. Junior, do you have any comments on this one?
I'm not too sure which market are you referring to, but as a whole, we are still positive on equity as a whole. So again, back to our view, I think in terms of different markets, right? We this year we are more positive on Asia, where we think that be it policy driven, we see China, we see Singapore, or even Malaysia. All these markets are going to drive on that. When it comes to the Japan, like someone asked about Japan, I think right now Japan is also riding on one of the key catalysts, which is their new president, Sane Takagi, where her policy mandate has been quite aggressive, quite expansionary towards the through some of the policy like tax cut to boost the domestic consumptions. And I think just now Paul and also mentioned they are pushing more on the technology side for more tax self-sufficiency. So and also right now, if you look at some of the sectors right there, I think Japan is some of the Japan technology company is still playing quite a big role in terms of the entire tech value chain. So be it profit taking, I think right now in what investor can do is after the recent sell off, if you do echo with our view towards some of the markets, I think it serves as a pretty good time for us to enter into these markets, especially after the recent drawdown caused by the Middle East war.
I
Yeah.
think generally, from a historically kind of speaking perspective, is that my lesson learned is try not to be too tactical, right? So
Yep.
I'm just talking broadly, right? So because like when you're investing, you want to make sure that you're investing in businesses that have very strong moat, right? Have very strong growth potential, right? So then you have those business owners, leaders that do the work for you because we are investors, right? So then the business owners should be the one that worry about growth, sustainability, and fight for market shares and create new products. So yeah, so I think one key lesson is try not to be too tactical. Yeah.
Yeah, not too tactical, meaning to say not overexposed towards risk, right?
Yeah,
Basically.
think more long term, right? Yeah. So so that is what I would say. So definitely our portfolios would have some tactical and long term positions, right? We can change anytime. It's like if market rally too much and depends on risk reward, right? Where have better rewards, right? So then we'll move our location there, right? Sometimes fixed income can be also good, kind of a better place to have better rewards, right?
Yes, correct.
So nowadays, like your fixed income, some of our fixed income position is able to give us like kind of 6 to 7% kind of yield, which is actually quite decent.
Yes, correct,
Yeah.
correct. Yeah, so definitely, I would say it's a combination. So we are not focusing too much on tactical. Instead, we are going for a balanced approach, meaning to say you have some core allocation, you can have some tactical, and also just to have a little bit on the fixed income, just to play safe, be a little bit more defensive lah, to preserve the value of your capital. All right, so let's see if we have any other coming.
I think there's a question is like whether does the war speed up EV and as well as solar dependency and investment in this area so that oil dependency would be lower based on this. Yeah, so I think this is I think the person asking this is have actually lived through COVID period. Like COVID period actually like drive up the speed up the EV and kind of solar developments. But I think the EV and solar side is much more natural kind of drive, right? Uh, whether any events that's happening, the developments in this area is actually can sustain itself, right? Because that is basically the kind of the sector of the future, right? That
Mhm.
that people are looking forward to. So I think key things now is more about adoption, right? Whether more kind of countries. So EV, you talk about EVs, you talk about electric cars, like so. Now we're actually talking more about full self-driving, more features, right? So whether like let's say in US or any countries, whether there's actually increasing kind of regulatory from regulation perspective, whether there's allows the company like maybe Tesla or any companies to have features like full self-driving, right?
Yes.
So then that would be attractive, right? So I think even in Malaysia is that a lot of I mean a lot of drivers that actually started like your BYD, your Tesla is like there's a very good feel of driving these cars, right? They actually
Yep.
prefer. Actually, once you go EV, you tend to not to go back. So
True.
so adoption would definitely increase. Yeah.
See.
So in terms of you talk about war and all these things, then you think about EV, right? EV, some of the EVs, the one that we come with better features are actually not something that's very cheap, right?
Yep.
So if you think about that, then oil prices, whether it's high or low, it doesn't affect the buyers in this segment. Doesn't
Mhm.
affect too much, right? So because like buyers in this segment basically is people who have better like income generation, right?
Yes.
To actually like choose for EV, right? And also actually solar panels also is not cheap, you know. It's actually quite expensive.
True. True.
So so yeah, so that is so it's more towards like adoptions, like people opening up to new technologies,
Mhm.
right? Yeah.
Right. Okay, I guess maybe we can take one final questions. I guess since for this webinar, right, one of our main topic is actually about Malaysia market.
Mhm.
So I can see that right now there is a client asking about that it is a follow-up question, right? So from what the client mentioned is that we can see although the outlook is good, we can see from the pour in the external investors, we can still see big company stock will still lower than it was. How shall we position our view on this, and how do we read the recovery signals and even go up again signals?
He's the best guy to answer.
Yep.
I think when it comes to Malaysia, right, I think uh you are saying that some of the big companies are still seeing some of the so-called retrace, right? I think it goes back to the sectors where the companies that you are saying. I think right now looking across the different sectors within big caps, right? I think one of the few of the sectors that we are seeing more positively is actually some of the financial, the banks, constructions, and even some of the consumer names. So I think reason being very important, very simple. I mean, we have saying we have been very positive, saying so much positive things towards the domestic economy, right? So and also just now I've mentioned some of the construction upcycles, and not to mention, I think for Malaysia, everyone knows about the Johor Singapore Special Economic Zone, right? I think even though all these policy, all these like, even though the Madani government has announced all those NIMP, NER, all different kind of the so-called Madani government framework, I think underlying a lot of projects are still ongoing, which is why this year, if you look across we look across the ground, right? Everyone is saying this is an execution year. So I would say, in terms of sectors that we are more positive on, that we could see more recovery. I think the three sectors that I mentioned just now, which is banks, construction, consumer, all these sectors are going to benefit from the current the policy and also the current pipeline. And not to mention in the recent earnings result, we do see that for one of the biggest construction players out there, Suncon, right? They just gotten 1.15 billions of data center contracts from a US contractor. So I think all these are signal signs that right now Malaysia, our investment flow is still strong, and some of the thematic play like construction data center play, we are still seeing more and more pipeline coming in, building up the contract coming in, building up the constructor pipelines. And not to mention in terms of policy, do not forget that this year is a visit 2026. We are seeing more and more foreigners coming into Malaysia. If you walking around in the pavilion, right, see a lot of foreigners' faces. So I think definitely consumption, definitely consumer, even your tourism's industry will definitely be benefited. And so right now, even though, I mean, over the past few days, I think Malaysia, yes, we see some of the retrace, but I do think that if you take back, look at the fundamental, look at earnings, right, which is the indicator of why foreigners want to coming in. Right now, I think the strong double digits growth, especially within the small cap players, are the best thing that investor can. It's one of the things that we can see for the upcoming more foreign inflows, or even the rotations of fund flows coming back into these sectors to seek for more value. Yeah.
Yeah. All right. So I guess just to quickly summarize a little bit from what Jun Yong have mentioned is that right now, definitely the growth potential is coming in. And right now, I guess we are still focusing on the three sectors, right? Which is the construction, financials, and also the consumer products. Yeah, so I guess this can be some of the sectors that, our investors can check out for their, future investment planning lah, basically. All right. So I guess this would be I guess right now we will be summing up for our Ask Me Anything webinar. So I hope that we have addressed most of the questions that you guys have in your mind. And if there's still any other questions that you need to, further clarify with our experts over here, feel free to reach out to us and then just send us your burning questions and we will try our best to address it for you. So before wrapping up the session, I would just like to shout out a few promotions and also campaigns that we are running. So right now we have our fund choice for March, and there are actually two funds, which is the Aham Equity Fund and also Principal Islamic Enhanced Opportunity Funds. So since we were discussing about Malaysian markets and we do have a very positive outlook for Malaysia, I guess this can be also a funds that you can consider adding into your portfolio. And even better, right now, the fund has a lower sales charge at 0.8%, right? So this campaign will be last until end of March. So definitely, I would say you guys can definitely check out on these two funds. And also, we are still having our ETF RSP 0% processing fee campaign right now, and it will be last until the end of the year. So if you guys are still looking at any of the ETF that is within our RSP list, yeah, you can definitely set up to it, and then there will be 0 processing fee on it. So more capital invest into it, meaning to say better compounding element and also better growth potential for your investments. And last but not least, we have our referral campaign extended to 29th of May 2026. So if you have any of your friends or family or even colleagues that are planning to kickstart their investment journey, feel free to share your referral codes to him or her. And once he or she set up a new account that make any new investment into your account, both of you will be getting a 25 ringgit cash reward, and also you will be entitled to a 30 days new account benefits, right? So this benefit actually allows you to trade your unit trust, stocks, ETF, and even bonds at a 50% discount. Okay, so here we are wrapping up the session, and we just would like to express our heartfelt gratitude to all of our viewers for tuning in tonight. And we hope that this session has been fruitful for you and it can actually help you to make better and informed investment decisions. All right, so again, if you have any more questions, feel free to just send it to us and then we will try our best to address everything for you. So, yep. And yeah, I guess this would be it. And right.
Bye. Thank you,
Okay.
guys.
Bye.
Thank you.
Thank you guys. Thank you so much and have a great night ahead.